All right, property income and investments. Sorry, I write individuals. It's investments is our new area which we are gonna look at now. So first of all, we have to look at property income liable. So, the following income is liable to assessment as property income, that is rents under any lease or tenancy agreement. Lease or tenancy agreement. Number two, premium received on the grant of short lease. Right now, as far as the basis of assessment is concerned, income from land and buildings prior to 2018-19 was computed for individual if the letting of property was a business, and the amount accessible in the tax year was computed at the rental income accrued less allowable expenses incurred, that is the accrual basis. But now, uh, from 2018 and 19, a simple cash basis is now usually applied, and in exam uh, you know question should be assumed to apply unless specifically stated to the contrary. So a taxpayer may choose to use the accrual basis, but must use the accrual basis, may use the you know a taxpayer may use the accrual basis but must use the accrual basis, but must use the accrual basis where property income receipts exceed pound 150,000, right? Therefore, on the cash basis, the assessment will now be rental income received less allowable expenses paid. Now, the example is, so here is the example. Jim bought a property and rent it out for the first time on 1st July 2019. The rent of pound 6,000 per annum is paid alternatively quarterly in advance or quarterly in arrears, right? He paid allowable expenses of pound 300 in November 2019 for redecoration and pound 500 in May 2020 for repairs completed in March 20. Calculate the property income assessment for 2019 and 20, and also compute the assessment if the taxpayer choose to use the allowable basis. So from 2018 and 19, as I told you, the cash basis has become the default. Has become the default setting for individuals and partnership in assessing property income. Right. So if the rental income is received quarterly in advance, then amounts would be received in 1st July and 1st October 2019, and then 1st January and 1st April 2020, and the amount gonna be pound 6,000. So in the exam question, you might be told, however, that the amount due on 1st April 2020 was not received until 15th April 2020, and therefore only pound 4,500 would have been received in 2019-20 tax year. If the rent was received quarterly in arrears, then amounts would be received, you know, okay, if the rent was received quarterly in arrears, then amount would be received on 30th September and 30th December 2019, and on 31st March 2020, amounting to 4,500. Again, in the exam question, you might be asked or told that the amount due on 31st March 2020 was not received until 9th April 2020, and therefore only 3,000 pounds would be received and assessed in 1920. Right. So the allowable, uh, the pound hit 300 allowable expense paid in November 2019 will be the only deduction in 2019 and 20, as the repairs expenditure incurred in 2019-20 was not paid until the 2020-21 tax year. If therefore the rental income is received quarterly in advance, the property income assessment will be 5,700. How? You can see that pound 6,000 minus pound 300, that's gonna be pound 5,700. Whereas if the rental income received is quarterly in areas, that assessment will be like pound 4,500 minus pound 300, you will get 4,200. Okay, so far so good. Then we have accrual basis, rent due, 6,000 into 9 divided by 12 is 4,500. Then the expenses, redecoration, repairs, here we get 800 deduction, property income for 2019-18, 3,700. So far so good. I hope you get it till here. Okay, allowable deductions. To be allowable an expense, must have been incurred wholly and exclusively in connection with the business, for example, insurance, for example, agent's fee, other management expenses, for example, clean expenses, repairs. For motor expenses incurred, the taxpayer will now use the HMRC approved mileage allowance, which will be 45 miles per pence instead of computing actual motor expenses incurred. Although this part we will look at in detail in the later on. And then interest on loan to purchase the property, or you can say finance expense on property. For further, let's see. Though okay, and further, I would say capital expenditure is not allowable. Is not allowable. That is, repairs are allowable. Revenue expense are allowable. Revenue expense, improvements are capital, and therefore not allowed. Capital allowances may be claimed for expenditure on plant and machinery, for maintenance of the property. If residential lettings are either partly or fully furnished, tax relief is usually given for the furniture and given for the furniture and furnishings by replacement furniture for by replacement furniture relief. There is no relief for the initial cost of furniture for the initial cost of the furniture and furnishings. There is only relief when assets are replaced This will include furnishings such as carpets and curtains, electrical equipment, such as TV, fridge, freezers, and washing machines, and even cutlery and crockery. Okay, the next, the amount of relief is reduced by the any proceeds from selling the old asset which has been replaced and relieved is not given for any cost which represents any improvement, which represent any movement, uh, uh, yeah, which represent any movement, sorry, not movement, improvement. For example, a fridge. If a fridge is replaced with a fridge freezer, only the cost of an equivalent fridge qualifies for relief. Next, replacement furniture relief not so it does not apply for furnished holiday lettings. Because the cost of furniture and furnishings in such properties qualifies for capital allowances. Next, relief is available for revenue expenditure incurred before letting commenced under the pre-trading expenditure rules. That is expenditure incurred up to 7 years prior to renting is treated as being incurred on day one of the letting business. Now let us look at the now let us look at the example, folks. So for this part of the question, so we received rent received is 800 into 11 will get 8800. Expenses, replacement furniture relief, 300 minus 50, I will get 250. Insurance paid, 480. Drain clearance, 380. We'll get 1100 total, and our property income is 7690. Right, the garage is an improvement, not a repair, and is therefore not deductible. The reduction cost was paid in 2020 and 21. An equivalent replacement cooker would have cost 300, and proceeds of 50 were received on the sales of the old cooker. I hope you get it. As far as the property losses are concerned, if total expenses are greater than total income, obviously the rent and income then will be nil, and the excess property loss is carried forward and offset against future property income profits only. Right, so property loss is carried forward and offset against future property income profits only. That's it. I hope you get it till here as well. Then we have finance expenses on property income. So until 2008, 17, 18 tax year, finance expenses use finance expenses, namely mortgage, interest, were a full, and these were the fully allowable expense to be deducted in driving the property income assessment for the tax year on rental property. But from 2017-18, there has been a fundamental change. There has been a fundamental change for property income for property income to how tax relief is achieved. For such finance expenses incurred in a tax year, such that in 2017-18 only 75% of expense was deductible, falling in 25% to 0% from 2021. 2019-20 25% of finance cost will be allowed as an expense deduction against rental income, right? So let me repeat this one again, such that in 2017-18 only, how much? 75% of expense was deductible, okay, falling in 25% points to 0% from 2020-21. Therefore, in 2019-20 only, how much? 25% of finance cost will be allowed as an expense This relief will, however, only be given at a basic rate of 20%, so that this change will there have no overall effect on the tax liability of a basic rate taxpayer, but will increase the tax liability of higher rate or additional rate taxpayer. In 2019-20, therefore, if a taxpayer incurs mortgage interest expense of 4,000, only 1,025% will be shown as an allowable expense against property income. The remaining 3,000, that is 75%, will achieve tax relief as a tax reduction at the basic rate of 20%, thus reducing the tax liability by 600. I hope you got it till here. Now let us look at the another example. So D house has employment income of 60,000 in 2019 and 20. Okay, and rental income received of 10,000. She paid maintenance expenses on the property income in 2019 2,800 and mortgage interest charges of 6,000. Calculate the 2019-20 income tax liability of D. So far so good. Let's look at the property income assessment now. Rental income received 10,000, mortgage interest 6,000 into 25%, 1,500. Maintenance cost 800. Property income 7,700. Employment income 60,000. Property income 7,700. Total income 67,700. Personal allowance 12,500. Taxable income 55,200. Income tax non savings 37,500 into 20% is equal to 7,500. 17,700 into 40% is equal to 7,080. I will get 14,580. Then we will get less interest relief. Okay, as we studied, 6,000 into 75% because it is related to 2018 19 or 17 18, I guess. So 20%, I'll deduct 900 from it. Then my income tax liability is 13,680. Cool. Done. I hope you get it. Okay, furnished holiday lettings. There are special rules for furnished holiday lettings. So, what are those? The letting is treated as if it were a trade. This means that although the income is taxed as income from a UK property business, some of the provisions which apply to the actual trades also apply to furnished holiday lettings. Number one, uh, capital allowances are available for furniture, right? Um, Income qualifies as earning. Well, what is capital allowances? We will look at to the upcoming session. Right, income qualifies as earnings for pension relief. Number three, capital gain tax rollover relief. Gift reliefs and entrepreneur relief. Are all available, right? And these reliefs will come into the later chapters as well. The profit or loss computed for the tax year on a cash basis, but losses may only be carried forward against future profit from furnished holiday lettings. The letting must be of a UK or European economic area, furnished some accommodation made on a commercial basis with a view to the realization of profit. In addition, the following conditions also need to be satisfied. And what are these conditions? The accommodation must be available for at least 2 10 days in the tax year. The accommodation must actually be left for must actually be let for at least 200 and sorry 105 days in the year, 105 days in a year. Okay, then no one person can occupy the property for more than 31 consecutive days if one or more person occupy the property for more than 31 consecutive days, then this period of long letting must not exceed 155 days in the year. Alright, I hope you get it still here. Uh, if you get a rent a furnished holiday letting question, you just need to remember these rules to deal with the questions. And now we will look at a rent room relief. If an individual lets a room or rooms, okay, if individual let a room or rooms furnished if in his or her main residence as living accommodation, then gross up to £7500 are exempt. If gross rent exceeds £7500 per annum, the taxpayer may choose to assess as follows. Right, firstly, ordinary calculation. Gross rent less expenses will get the property income. Then we have alternative collection, alternative calculation, gross rent less rent a room relief, which is 7500, and we will get the property income, right? So the election must be made 2019 and 20 by 31st January 2022 and stay in force until it is revoked. I hope you get it. Let us do the example. So now we have example B rents a room in her main residence. Gross rent received are pound 650 per month, and expenses amount to pound 1200 in 2019-20, and the requirement is obviously to calculate tax for 2019-20 for B. So what's firstly, let us do the ordinary calculation. Gross rent 650 multiplied by 12, I'll get 7800. Then less expenses will get 1200. Property income 6600. Then we have alternative calculation. Gross rent 650 multiplied by 12, which is 7800, less rent room relief 7500. 300 is my property income under it, and obviously as the ground rent exceeds 7500, Barbara must select for an rent a room relief to apply if she wants it. B should elect for the alternative treatment in 2019-20 by 31st January 2022. Now we will look at the lease premium. On grant of short lease, which is 50 years or less. Okay, when tenant takes on a new lease, he may be required to pay one of premium in addition to the annual rent If the lease is for less than 50 years, part of the premium is assessed on the landlord as property income. The remainder is treated as capital receipt. Okay, then the amount of the premium assessed as property income is P multiplied by 51 minus N divided by 50, where P is equal to total premium and N is equal to duration of lease in years. Alternatively, the assessable premium may be completed as the full premium received less 2% of the premium for the number of years of the lease, 1 year. Right. Uh, Now again we will look at the example. So here is the example. B and R are leased to a shop on 30th June 2019. Annual rent 5,000 due on 1st July 2019. Term is the 20 years and premium is the 60,000. We have to calculate the property income assessment for the B in 2019 and 20. So what we have to do now is simply very simple and easy. uh, Rent relief is 37,200 divided by 20. We will get 1860 per annum is our answer. As far as investment is concerned, income saving account and stuff we already did in our previous chapters. So that's it, and it's the end of the chapter.